Hello, everyone. Hi. Hello. Yeah, hi, everyone. I'm CS Varta, Chief Compliance Officer of Uniqey by JJ Dax. So basically, I've experience of more than 7 years and in the compliances and the funding related work, advisory part. So basically, Uniqey JJ Dax by JJ Dax is providing all the services like company compliances, taxation, legal, accounting. We provide all the services. It's an app-based company. If someone has query, you can chat with the experts and ask your query. We have a team of experts, CA, CS, CMAs, and accountant and lawyers. So today's topic is mandatory post-incorporation compliances. As you know, after the incorporation of the compliances, there is a after the incorporation of the company, there's a lot of compliances to comply by the company. So, firstly, we are discussing from the starting with the board meeting. So, board meeting is required to be uh, held to check the operations, management, compliance of the company. After the incorporation, board meeting is required to be held within a period of 30 days from the date of incorporation. And subsequent board meeting is required to be held within a four subsequent meetings are required during the financial year. That is a minimum requirement. And the two there is a two 120 days gap between the two board meetings. And for the OPC, at least one meeting should be held each half calendar. That gap should not be more than 90 days. Sorry, not less than 90 days. Require prior notice with the agenda to send to all the director within a period of 7 days. If it is not signed by the officer, then the penalty will be levied. That is a 25,000 rupees. Filing a disclosure of interest by the director. It is very important. Every director is required to give the disclosure at the first board meeting when he participates as a director, and the first board meeting every financial year, or there is any change, then they have to report in the next board meeting when the change has been arise in the form MPP1. If not done by the director, then the penalty of rupees 1 lakh will be levied. Appointment of auditor. That is also the very important compliance. Every company is required to comply. First auditor is required to comply appoint to within a period of 30 days from the date of incorporation of the company. And the term of first auditor will be till the AGM, first AGM. Subsequent auditor, every company shall appoint the auditor in the first annual general meeting of the company, who shall hold office till the conclusion of sixth AGM. For the appointment of auditor, there is a requirement to file the form ADT1 within a period of 15 days. Some companies not follow to prefer to file the form ADT1 for the first auditor, but it is recommendable, and the important part that we should file, every company should file the ADT1 for all the for first auditor at the company. Issue share certificates. So it is also the important part. The share certificates required to be issued within a period of 60 days, that is 2 months from the date of incorporation. Share certificate will be issued in the SS1. If the certificate is not issued within a time prescribed, then every officer of the company's default shall be liable to penalty of rupees 50,000. Declaration of commencement of business. It is very, very important for all the businesses. If they are not reporting this, then they can face a major issue. So basically, declaration of commencement of business is required to be filed by the company regarding that subscription amount has been received by the subscribers of the company. So basically, if it is filed in Form 20A, if it is not filed, then the penalty will be arise like 50,000 on the company, penalty of 1,000 per day of each director, subject to maximum 1 lakh. The registrar, even the registrar may remove the name of the company. The form timeline of the filing of Form 20A. The company must file the Form 20A within a period of 180 days after its incorporation. The practical issue is that basically if company not does not file the 20A, the bank account will be freezed by the bank. And after that, company will face the losses and revenue losses as well. It will take time to file the form and the comply the things and activate of the bank account. This is a practical issues many of persons are facing after the incorporation. They have not filed the form 28. Director C 3 KYC compliance, it is required to keep the DIN active, required to file every year. That is for the DIN activation. So it is very important for all the directors, even they are not appointed till now any till right now. If they are not director in any company, but they have a DIN. So if they want to keep their DIN active, so it is very important. So there's a two method. If we are doing the DIN authentication and by the professional, and if we are doing 3 KYC for the first time, then form will be there. 3 KYC will be filed. If in the next year, after if we are doing every year, so after that, their 3 KYC web will be filed. If failure to file the DI 3 KYC on time, deactivation of DIN and incurs a late penalty of 5,000 rupees. Return of MSME. What is basically the return of MSME? So it is required to be filed by the specified companies to who has taken the services and goods from the MSMEs and made the payment delays beyond 45 days. Who should file the form MSME 1? I have already discussed earlier that who is taking the services and goods from the MSMEs and not making the payment within a period of 45 days from the date of acceptance and of the goods and services. Purpose of filing a form. It is very important. Why it is important? Because it is important because why it is introduced by the ministry and all. Because the keep track record of the company that how have outstanding dues toward the MSMEs and prevent the financial losses for the small enterprise. Basically, it is for the supporting to the small enterprises. If because they need funds because they are at the early stage, so it is very important for the benefit of the MSMEs. Important amendment. Last year, there was amendment in the form MSME 1. That is, we have to put some new information that amount paid within a 45 days, amount paid after 45 days, amount outstanding for more than 45 days, or within a 45 days. Or we have to put the reason for delay. Due date of filing of form MSME. MSME is filed basically for the half yearly basis. We file form financial year two times. That is for 30th April and 31st October. What is DPT3? DPT3 basically a return we have to file till 30th June and from the end of the financial year. And basically, what is the deposit? Any amount received, money received by the company that qualifies deposit and outstanding receipt as well. That is not considered as a deposit. So we have to report both the transaction that is considered a deposit, and some transactions are mentioned in a definition that is as per the Companies Act. Some points are mentioned and some transaction are mentioned there. So that will not be considered a deposit. But if they are following that, so we have to file the DPT3. There are some exemptions are provided from the DPT3. Some certain companies are required to file the DPT3. That is government company, NBFC, and housing finance companies. Penalty. So there is a lot of penalty as companies that is very strict and government is very strict about the compliances from nowadays, as you know. So penalty for the amount of deposit, interest due, and plus fine which shall not be less than 1 crore rupees and twice of the amount accepted by the company, whichever is lower, but which may extend to the 10 crore rupees as well. Apart from that, the penalty will be levied on the officer of the company as well. Every officer whose default shall be punishment with the imprisonment which may extend to 7 years as well. That is very long period. So which shall not be less than and along with the penalty will be levied that is a 25 lakh rupees which may extend to the 2 crore rupees. Reconciliation of the share capital audit report. That is also the compliance part required to be complied. So earlier it was not required to public company, private company, unlisted public company and private company to get their shares in dematerialization form. But some years back, they have introduced that that public companies required to, unlisted public companies are required to keep their shares in dematerialization form. After that, the private company, it is applicable on the private limited company as well to keep their shares in a dematerialization form. So after the introduction of the Rule 9A and Rule 9B, both public and private company are required to dematerialize of their shares and to file the form Pass 6, sorry. Pass 6 is required to be filed by all the company except small private limited companies, government companies, unlisted public needy companies, wholly owned subsidiaries of unlisted public companies. Due date of filing of Pass 6. Pass 6 is a half-yearly form that a listed company must file to the ROC within a period of 60 days from the each of the half year. Penalty for non-filing of Form Pass 6. As per there is in the section, there is no specific penalty is mentioned. But when there is no any special penalties mentioned in the section, then the section 450 of the Companies Act will be applied. The company and every officer of the company who is in default or any other person shall be punishable with a fine which may extend to 10,000 rupees. If they continue this, then penalty will be 1,000 rupees per day and maximum 2 lakh rupees in case of a company and the 50,000 rupees in case of officer in default. Filing of resolution with the ROC regarding board report and annual accounts. It is in accordance with the Companies Act. In the public companies, like including listed companies, public companies are required to file board report and annual accounts in the MGT 14, in Form MGT 14 within a period of 30 days from the date of passing of board resolution. So it is important for the public companies, not for the private company. Annual general meeting. As per Section 96 of the Companies Act, it is every company is required to hold their AGM every year. Other than one person company, first annual general meeting should be held within a period of 9 months from the end of the financial year. And if apart from that, every company is required to be held if other than it is a first annual general meeting, that is 6 months from the closure of the financial year. Annual return. That is the important part. We have to file every year by every company. So MGT 7 and MGT 7A. What is the difference between them both? So MGT 7 is for all the companies except small companies. So small companies are required to file the MGT 7A and for the MGT 7 is required by the other companies. Reduce the compliance burden for the small entities. That this is the main reason to introduce the form MGT 7A. Due date for filing of MGT 7 and MGT 7A. MGT 7A or 7 will be filed within a period of 60 days from the date of AGM. If company has OPC is not required to schedule and conduct their AGM, so it is filed within a 60 days from the last date on which AGM would have been held. Recent key amendments now introduced by the ministry. So, Minister of Community has notified some. I have mentioned here the some key amendments. So, in the new amendment, photograph of the registered office is required to be mentioned along with latitude, longitude. Register of an address as well, and the SEBI registration number is also required to be mentioned. Share transfer details, and for the number of transfer details, there is no need to mention in the form. We have to attach a separate sheet in the form. Shareholding breakup, that is a gender-wise classification we have to give in the form. And now the list of shareholder, the venture holder will be in the Excel form, or there is no required to attach the PDF form for that. And so no longer necessary. Due date for AOC 4. Financial statements are company are required to file in the form AOC 4. So basically, the AOC report is required to be filed within a period of 30 days from the end of the financial year, in which we have report each and every financial data and including board reports and recent amendment in the board report as well as we have to put the some sexual harassment at the how many complaints are received in the uh, complaint repeat during the year. So we have to put in the board report as well, and how many complaints are resolved. So this is the amendment. It was introduced in the board report. So we have to file and comply this. Thank you. If anyone have questions, then can ask any doubt. Yeah. So there's a difference between MGT7 and MGT7A is that basically MGT7 is required by to file by the all the companies except small companies because there's a lot of things we have to put in the MSME MGT7 basically. So this is the basically major difference between the MGT7 or MGT7A. Anyone have any questions? Yeah. So basically, the quorum for AGM is two members should be personally present in a meeting. So this is the requirement for the private limited. Uh, does non-compliance of the form pass six invalidate the allotment? No, no. So basically, if we are not filing the form pass six, so it will not invalidate our allotment, but penalty will definitely levied, as we discussed in the uh, webinar. Oh, okay. So basically, if a company they don't have share capital, so there is no requirement to file the 20A because it is a requirement for the reporting for the funds has been received, subscription money has been received from the subscriber, so it is not required for that. Okay. So if we have not filed the DI3 KYC, then there's a penalty of 5,000 rupees will be levied for per din. So basically this. Okay. So which companies are required? Someone are asking which companies are covered under small companies. Okay. So if paid up share capital is 4 crores and more and turnover 40 crores and more, then that will be covered in the. So both limits we have to comply. If anyone which we breach, then we will not fall under the definition of small company. I hope I have given the answers of all the questions. And so thank you so much to listen me for just a minute to okay, okay, okay. Thank you so much. Thank you.